We now move on to question number 1C, which is on inventory valuation. In inventory valuation, the concept is finding out the value of the cost of goods that remain unsold on the closing date of the financial year. Now, in the present problem, they have given us the value of stock, and it was done on the 15th of April, and the amount standing there is 1,50,000. Now, since the valuation of the stock was done on 15th April, that is after the closing date, we will add up the sales between 31st of March to 15th of April at cost and subtract the purchases, which is already at cost. So moving to this problem, the value of stock given on 15th April is 1,50,000. Sales, but mind you, sales is at the selling price. It will have to be added at the cost. So the cost is 80% of 70,000, that is 56. Same way for cash sales, it is 80% of 25,000, that is 20,000. Purchases, as I said, is already at cost, so that will be subtracted. The cash purchases and the credit purchases, both sales and purchases which have taken place between 31st of March and 15th of April. Now, besides that, they have also given us that there was a sale on sale or return basis. And when was this done? On the 25th of March. And it is sent on sale or return basis. Now, when the customer gives the approval, at that time it will be treated as a sale. Now, the customer gives the approval on the 12th of April. That is after the stock closing. Now, they tell us that the customer has approved 75% and returned 25%. When was it returned? On the 12th of April. So if it's returned on 12th of April, it already forms a part of my stock taking on 15th April. The remaining 75%, when is the approval for that done? On the 12th of April. That means it's a sale on 12th of April, and as I said, the sale is 75% of 30,000, that works out to 22,500. But I said any sales which take place after the financial year ending to the date on which the stock was taken has to be recorded at cost. So it is 80% of 22,500, which works out to 18,000. There is another adjustment that's given. They're saying the trader has also received goods costing 10,000 in the month of March for sale on consignment basis. Now you have received goods on consignment basis. By the way, it is not your sale. You are selling it on behalf of another party for possibly a commission. Now they say that 50% of these goods had been sold by 31st March. So out of 10,000, 50% are already sold by 31st March. That means they don't form a part of my stock on 15th April. And they say on 31st March, another 25% had been sold. So, sale or consign, 50% sold by 31st March and another sold 25% on 15th April. So you have sold how much of these goods which you have received on consignment? 75%. So what is the value of the consignment stock that remains with you? So the amount that remains with me is only 25%, that is the unsold portion. But this unsold portion is not the stock of the business. It is a third party. Therefore, we will have to reduce it, and the amount is 2,500. So the stock taking on 15th April 1,50,000, your additions come to 94 and your subtractions come to 42,500. So the value of your stock on 31st March 2025 is 2,01,500.